couple of weeks ago, the commentator asked me, she said, can you guarantee me there won't be a recession? And I said, I can't guarantee you anything. There's nothing that tells me there should be one. So I believe that this is going to work, just like President Reagan believed that supply side economics was going to work. But what I do know, that the old system wasn't working.
I think that's right.
And if you look at a system that's not working, you got to be brave to change it.
That opening clip is from U.S. Treasury Secretary Scott Bessent. And this is going to be a reoccurring theme where he uses the term, we have to build a new system. The old system isn't working. We'll go over some stuff, whether we're talking about international trade, payments, monetary policy. It's all being redesigned. And blockchain plays a central role here. Now, understand this. Whatever you feel about the current regime here in the United States, this isn't a president just making moves by the seat of his pants. If you were to figure out, all right, how many people alive today really understand the levers that make all of this work and, how international trade really affects things, Scott Bessent would be at the top of the list, Howard Lutnick, Ray Dalio. We're going to go over some of his thoughts on tariffs. So, this is well designed. Now, make sure you understand this, that the scope of this is so large, things could absolutely go wrong. But, when you're looking at this, it seems extreme, but you will see, not just the United States, but every country globally is going to be redesigning a lot of this stuff. Crypto, blockchain, it's not the whole story, but it's an important one. And of course, the one we're going to focus on here. And what you're going to notice as we continue to go forward, Ripple, XRP blockchain, Ethereum, Bitcoin, Circle, major US blockchain companies, they're going to be really popular with this administration. Part of the reason is this, stablecoins and crypto really might not only save, but strengthen the US dollar. Stablecoin issuers like Circle, Paxos, and Ripple are quietly becoming massive buyers of short-term debt. Every USDC minted, every RLUSD minted, well, that's a short-term treasury that's been purchased. More crypto equals more demand for short-term debt. But stablecoins aren't enough. What's our big problem? We're seeing countries, specifically China, they're starting to ditch long-term treasuries. That's really where some of these new systems come in to tokenize long-term debt, put it on the blockchain, make it easier to trade, to hold, to invest in, to get your money out if you want to trade out of that treasury. And you're seeing this new system being ushered in. The U.S., we still need, even with stablecoins, and they're going to be massive buyers of short-term debt, the U.S. still needs 10 to 30-year bond holders or face rising yields. And this is where tokenized treasuries come in. Protocols like Ondo Finance, institutions like Franklin Templeton, BlackRock, they're focusing on, really taking U.S. debt and putting it on chain. And I think when you look at a lot of this stuff, it's why, again, companies like Ripple are going to be popular. If we go the CBDC route, that's just US dollars. You still have to have a buyer. When you have these private companies as intermediaries, they're going to be gobbling up your debt, whether they're buying it to put long-term debt on chain, whether they're scooping up billions and billions and someday trillions of dollars in short-term US treasuries to back their stable coins. Yeah, this is a big deal, and this is going to fuel this current economic system, and it's going to make up for some of the people that are exiting this system. We've heard Chris Larson back in the day talk about, crypto, it's not going to replace the dollar. It's going to expand not only the dollar, but the yuan and the euro and all your major fiat currencies. And you're going to be able to zip US dollars into territories that maybe are hostile towards your currency. But guess what? Someone's got a decentralized wallet. They can hold dollars. They can transact in dollars. And that digital dollar is backed by US debt. It just keeps everything chugging along. Now, we still need our traditional cryptocurrencies, of course, that can't be debased, that can't be clawed back and all this kind of stuff. But this is just going to fuel the adoption of crypto technology, of blockchain. And we're going to make those true cryptocurrencies that much more liquid because now you are piping in traditional finance directly into the blockchain and swapping from a digital dollar, to an XRP. Hey, that's pretty easy, isn't it? Very cheap. Same thing with Ethereum and all the other crypto assets. This is just going to fuel the digital asset economy and in a significant way. And it's important for the future of finance, the security of this country and countries globally. We think of right now, the US, they weaponize the financial system. Everyone out there can see that, can understand it. But guess what? It might not always be the US doing that, right? You have to have decentralized finance that no one can stop. Because what happens if someday it's going the other way? Is China doing that to us and people teaming up with China? It's not hard to imagine that type of future. And we want to buy some supplies, some weapons, some natural resources, and we can't because we've been unplugged for whatever the future of finance looks like. If it's not Swift, it's something else. That's not acceptable for any country, and we really need these digital systems to make sure you can trade and you can transact with all of your allies and trading partners and things like this. You don't know what the future looks like, and for a lot of countries right now, they know what the present looks like, and it's unacceptable because, again, the U.S. wields entirely too much control over the current financial system. We don't want to give that up, but at the same time, we got to protect ourselves from what's down the road as well. Dark Horse, I really like his posts, and because he makes you think, whether you agree with it or not. He says, seriously unpopular opinion, but Ripple, well, they're abandoning the XRP ledger, and they're using this sidechain. So, the sidechain's coming quick, faster than I thought. And they're going to extract through this bridge XRP liquidity, convert it to RLUSD, and relaunch it on Ethereum in its own DeFi layer without relying on XRP at all. I see what he's getting at, and it's something to keep an eye on, but I'm telling you, they're not abandoning XRP because XRP is their company right now. It's the majority of the value on their balance sheet. It's most of the revenue coming through their company. They're not trying to abandon anything. That's the fuel to their fire. If you took XRP away right now today, maybe in the future it'd be different. If you took XRP away from them right now, they would probably go out of business, So I don't think they're abandoning anything. And I had said this very early on, they will pivot and they will do a lot of transactions on Ethereum, but if they have their choice, they're going to do those transactions on the XRP ledger. Of course, they want to make that as valuable as they can because they hold 47 billion of them. And they want to go up just as much as we do. And it just meets the use case better. It's fast, it's efficient, great. It just needs that liquidity. And we saw they did a $50 million mint of RLUSD on the XRP ledger just last week. And I think we're going to see that continue to tick up. And as we see more on-chain transactions on the XRP ledger, well, that could be a reality. Again, Ethereum has the liquidity now, but we can compete and we can build up liquidity. And the XRPL can be a chain that possibly could have equal or superior liquidity in the future. We have to see it happen, but it very well may, especially if you start piping into all of these blockchains and you bridge over interesting assets, and there's a lot of trading going on in the XRP ledger. It's the OG RWA blockchain, and we're going to have stablecoins, and you're going to have Ethereum assets and all sorts of assets from other blockchains, all trading on this hub. At least that's the vision. And so I don't think Ripple's abandoning XRP. Quite the opposite. They rely on XRP. And we want more people, not just Ripple, we want more people coming over here to build on this ecosystem. And it just very well may happen. We may see Robinhood and some others this year go live, and that's going to be a game changer. So again, he brings up a good point, something to keep an eye on, something we know. Ripple's going to go multi-chain as they should. And to me, I just want to see Ripple have foundational success. I want to see their payment scale. I want to see them have success in DeFi. I'm not really worried about the XRP side of things. That'll come around. It's can Ripple really execute on things? If they can, I think it's going to be absolutely a killer for XRP Ledger and for blockchain in general. Eleanor Terrett saying the acting SEC chair, he's ordered a review of prior statements and guidance issued out by the SEC. And one of those that was highlighted was the 2019 framework for investment contracts analysis of digital assets, which relied in part on Hinman's 2018 speech. Now, the first reason I got wind of this is I was reading an article and it said, the current SEC or the acting SEC chair, he's ordered an investigation into Hinman. And I'm like, wow, really? I didn't expect that. It's not really that. I think they're just going through things that prior administrations have said. And they're going to take a look at like what Bill Hinman says with his sufficiently decentralized test and all this kind of stuff. And some of that really needs to be walked back. because it's just not good guidance. It's not sound frameworks. And so it's good they're looking at all of that so we don't keep bad guidance continuing to go forward. We'll see how it goes. Now, I saw this article here. XRP win leaves Ripple a bad actor because I guess they got fined. So maybe people look at them as a bad actor. I don't think anyone that knows what they're talking about does, though. And XRP with no legal precedent. And this is what I said today. Yeah, if we would have taken this to appeals, maybe to the Supreme Court, we could have got legal precedent. But what would you do with that? Let's just say Supreme Court level, the judge says, according to the Howey test, everything Ripple does is perfect and XRP is not a security. Why does that matter? Because the Howey test is going to be replaced here shortly, very shortly, this year most likely, with new regulations that are going to say, disregard the Howey test. Here are the new rules that will govern this space. So, you could go through years of fighting and legal fees, all for that to get wiped out, because once you have new regulations, that's what we're going to go by, not the Howey test any longer. So, I'm not sure what they're getting at with this article here. It's going to be a win. You didn't have to go to court and you're going to get those clear regulations, and it's happening likely this year. And even if you pressed on with your legal suit before you got to the end, you'd probably have those new regulations anyway that would just replace everything you fought for. Ray Dalio, I really like this post he put on X today. And he says, tariffs are taxes. And this is what's good, because a lot of people frame this in a kind of ridiculous manner. They say it's just a tax on the citizens of the tariffing country because the mechanics of it, but it's not really true. It's raised revenue from the company imposing them from both the foreign producers and the domestic customers. So it really could be three things, right? It could be someone's going to take a hit here. Either the consumer's going to pay more, the U.S. business that's selling that product, they're going to have to take that out of their profit, or they're going to have to negotiate with the producer in the foreign country saying, look, that profit isn't here anymore. We can't pay for that, and it's likely a mixture of all three, just depending on kind of which side can bear that additional increase. And so it's not as simple as it's just a tax on the domestic buyer or consumer. It's a host of different things. And look, he says it's stagflationary for the world as a whole. Something to keep in mind. It makes companies in the importing/tariffing countries more protected from foreign competition in domestic markets. So it's not like an open and free market, not that we truly have that anyway, which makes them less efficient, but more capable of surviving. And if aggregated domestic demand is maintained through monetary and fiscal policy. So you're protecting domestic production. You're less efficient. Sometimes you have to do that. He gets into that. Sometimes this is necessary in times of international great power conflict. So that's kind of what's causing all this. You heard from Bessent saying we have to redesign everything. You're going to hear from Lutnick kind of using that same terminology here. And that's what this is about. You have this great power conflict that Ray Dalio is great about pointing out. You have the rising power in China, of course. You have the United States, and you have all this conflict back and forth. And you have to make sure that you can hold up in times of monetary conflict, in times of actual kinetic wars, things like this. Not that you hope that doesn't happen, but you have to be ready for it just in case it is. He says monetary policies and interest rates are changed by the central banks. That's one thing they're trying to push here, of course. Jerome Powell says they're not going to act. He's full of it. They're definitely going to. Fiscal policies are changed by the central governments in response to these pressures. And tariffs are responded to with reciprocal tariffs from the people that we are levying these tariffs on. And that's the other thing. If it just was a tax on us, the consumer, well, the countries that were producing the product, they don't care. They're not flipping out because they care if I pay a little higher tax on my goods. They could care less about that. They care because they're not going to bring in as much revenue. They're going to have to take a cut on their end of things. There's going to be less demand. It's going to have effects for everyone. It's a lose-lose, but sometimes you have to do these kind of things. Howard Lutnick, this is interesting. He says, we need to change how trade works globally, not just the United States. This is on the global stage. Now, the other interesting thing here, people are trying to break down the math. Like, how did they arrive at these numbers? I'll tell you how they arrived at them. It's all nonsense. They cooked them up, and they jumped to the chase here. These are too high of numbers to be sustained, and you have to negotiate. Everyone, U.S., all the other countries globally, Like no one can deal with these types of numbers. And I think the flip side of things would be, start low and then just go tit for tat for 6 months of misery and pain to get to where we are now. And then you try to make a deal. Was this smart to do this with everyone at once, right to the top where pressure's on, you got to negotiate? We'll see. Depends on how it works out. Let's hear what Howard has to say here, though.
Change the way trade works around the world. It's tariffs, but don't get confused that these non-tariff trade barriers, they are the monster that needs to be slayed.
You've been consistent about this argument: subsidized production, manipulated currencies, foreign trade barriers, something the president addressed just last night. Can we just sit on the numbers just for a moment? The EU, 20%, 24% on Japan, 34% on China. Just what exactly was the methodology to go through all those different barriers to entry that you want to knock down? How did you come up with these numbers?
And Lutnick's going to tell you, oh, we're looking at all these. And there's some of that, of course. It's more than just the tariff number. There's a lot of things you can manipulate your currency, whatever. But really, it's everyone has to come to the bargaining table because no one can sustain this type of level. You have China already had a 20%. Now you're stacking on another 34%. EU at 20%. Vietnam, they're already looking like they're going to do a deal. Japan, 24%. Like, these are unsustainable numbers. And so Lutnick should just say, hey, this brings everyone to the bargaining table, at least in theory, but you might get a standoff. You might get a standoff where China says, you know what, we can't sustain this, but neither can you. So we'll let you decide when to break. You don't know how this will play out. But what I assume is this: some countries will start pouring in doing deals. And the more that do deals, if we could get some big ones to do deals with us, that puts pressure on the few that are on the outside looking in. That's the way you hope it breaks, at least.
Well, the Council of Economic Advisors, the PhD economists of the administration, coupled with USTR, the United States Trade Representative, they publish a book called Trade Barriers, about this thick, right? And they've been analyzing for decades all of these different tools that these other economies use to hurt America. Right? They won't take our corn in India. They won't take our beef almost anywhere. It's unbelievable. They won't take our agricultural products. They just treat us badly because we've allowed them to treat us badly. And when you finally go back at them and say, this has got to end, it's going to be tough for them because they've built their whole social network, their whole economies on basically exploiting America. And Donald Trump has said, it's time for America to change that. It's going to be difficult for them to change that, but eventually America is going to be treated fairly, and the production of American factories is going to be incredibly strong growth, and you're going to see that growth reverberate through GDP. Remember, people forget the D, gross domestic production. If you buy a foreign-made Toyota, that is not domestic production.
Now, some of this is just framing, right? Like, America is so mistreated. And of course, in some instances we are. And in some instances we mistreat, of course, other trade partners. The reality is you're going to see just a shuffling of the board here. You're going to see a lot of stuff go to Vietnam, South America, Mexico. And so I think they're kind of setting the stage there. And that's a process that takes a long time, but you need to start somewhere. And I think that's what we see happening here. And you're going to see a boom. I mean, like when you look at what's happened in Singapore, you're going to see that in South America. It's going to be crazy town as we reshuffle this board. And that's what it's all about here. Jim Cramer saying Monday may be 1987 Black Monday. You kind of got to always go against Cramer, right? Like, it makes sense. There's a lot of risk out there. But I've learned if you bet the opposite of him, more often than not, you're going to win big. Monday, maybe we see things rep just based off of that. No other reason. Tom Lee, let's hear what he has to say about this. Does he believe these tariffs are here to stick at these levels, or is this some sort of mechanism to make deals? Let's hear what Tom has to say.
Now, I know I just showed you his lieutenant saying he doesn't want a deal. But keep in mind a couple of things. The implementation date for the higher rate is April 9th. That is a delay, and I think that's intentional. And in fact, Trump himself, and I'll share later, despite what Lutnick says, actually has commented that he believes that he can strike a deal. He gave an interview on Air Force One Thursday evening after the market closed, and he says tariffs give us great power to negotiate. Specifically says every country's calling us. That's the beauty of what we do. We put ourselves in the driver's seat. If we'd asked for the countries to do us a favor, they would have said no. Now they're doing anything for us. The tariffs give us great power to negotiate. Now, keep in mind, 6 countries, maybe 7, are really at the heart of this tariff negotiation because they
And that's the big deal. It seems like this is ridiculous. How will we negotiate 185 trade deals worldwide? It's really 6 or 7 countries that we're dealing with here. I suspect, again, China's probably going to be tougher and longer lasting, but hopefully something that's good for everyone involved. I know I have international viewers all over the place. Look, I don't want to act like the U.S. has it so bad and everyone else so good. We need to kind of figure out what this new world order looks like, and this is just the opening volley of that, in my opinion. Mohammed Al-Arin says last week Goldman revised its U.S. growth and inflation forecast to a stagflation direction. Also, J.P. Morgan feels like the Federal Reserve will be much more sensitive to the employment part of the mandate, and as such, sees the central bank cutting at every meeting this year. That's a big deal. This is what we're going to. Lowering interest, quantitative easing, easier money, not this restrictive financial policy we find ourselves in now. When that happens, we get this trade stuff behind us, things go well. 2 weeks from now, we may not say, trade agreements again for the rest of this year. If that happens, we're in the perfect spot as we make that pivot for crypto assets to really do well. This is the future. This is part of all of this reordering of the financial order, of trade policy, all of it. Blockchain is involved. It's not the main driver. It's not the biggest thing, but for us, it's going to be. It's going to be the biggest boom we see out there from a financial perspective. It's just about timing. And, hopefully we catch a break here. This is a tough situation when we expect, crypto assets to be bullish, to be performing. Look, when this is going on, you're not going to wake up and see XRP hitting new all-time highs. But the question is the future brighter than the past for this asset? Is it brighter for really blockchain in general? And the answer is yes. It's just a waiting game at this time. Let me know down below what you think. As always, please like, please subscribe. The revolution will be televised right here on Jungle Link.